Hey, Sasha, the options coach. In today's video, we're going to look at a $1 million portfolio. I'm going to show you some profit potential or possibilities with it regarding if you're trading a stock portfolio with dividends and getting covered calls, meaning trading covered calls with dividends. And then also you could kind of compare it to a real estate portfolio because, well, house prices, you could either have two houses at $500,000 or one house at $1 million and rent it out, or a couple of houses for $1 million worth of portfolio. So it kind of could give you some insight. Again, keep in mind, stock prices don't appreciate up all the way. I'll be kind of generous with some flexibility there. And the same thing with houses. You'll have to have some maintenance and some other expenses that you have to take into account. It just gives you a rough idea of how to calculate these things and go from there. I do a lot of coaching and training when it comes to looking at covered calls. And then also we talk about dividends. So here's kind of a question that came up and spurred the idea for this video. Sorry if this is a dumb question, but is anyone selling covered calls on a security that pays a dividend? What's your experience with that? And what security are you selling? So I find I have pretty good experience with this, not a lot of issues. And the people I coach and mentor and work with, when we talk about trading covered calls, we do also discuss things with dividend stocks because it gives you a pretty good boost. As for stocks and tickers, I mean, there's a ton out there. I would stick to something that trades weekly options, liquid, and a fairly decent dividend, but avoid things that are too crazy or too big of a dividend. So for example, Ford gives you like a 4.25% dividend. BMY, you've got 5.62. Morgan Stanley got 3.61. UPS, we've got 4.49. BBY, you've got 4.23. You could see the dividend yield right there. That's kind of what I'm looking at. Pfizer, we've got 5.68. Verizon's pretty popular, 6.8. AT&T is right around 6. So if you choose one of the telecom stocks, there's that. There's some energy stocks like Devon, like 1.88 on the yield. So that type of stuff. And if you're choosing like stuff like Apple, they do pay a dividend, but it's very tiny. So the larger the dividend, usually the less the stock appreciates, or kind of growth related company there it is. But you know, it's more stable if they pay a dividend, but even P&G here, 2.39 dividend. Anyway, for this example, I'm going to use kind of like as you can see, I'll use about maybe a 5% dividend here yield, because Verizon's got a 6.8. So you can see that's one of the higher ones. If you do like MO Altria, it's almost 8. And Philip Morris, it's 4.85. So if you really wanted like a higher dividend, you could go for it. But again, I said it's a little more risky. So that's why for my example, I'm going to go with maybe about a 5% dividend just to give you a little bit of insight. But I'll use Verizon as a general kind of guideline. Okay. Keep in mind, you probably want to spread your money. You wouldn't put it all in one spot, but I will just deal with it from a Verizon perspective. Okay. So the current stock price is right around 40 bucks. We'll just call it that. And we're going to get a 5% dividend yield. So the way we do this calculation is that's a dividend yield per year. So if we look at this dividend calculation, you've got a portfolio size of $1 million. Now, you probably wouldn't allocate everything in there. So just again, kind of dumb it down. And that's why I said we'll probably just use 5% anyway on the dividend amount. Okay, so we've got a portfolio of $1 million. Okay, the way we do the dividend yield, okay, that we get is you just take 0.05 times that $1 million. So that will give us, and you just so people can see the math, there's the $1 million times 0.05. Then we hit enter, you get $50,000 for the year. Okay, so that's per year. It gets paid per quarter, but for the year, this is what you're making as far as the dividend yield is concerned. So it does help. If you had $1 million portfolio, you're basically getting an extra $50,000 on other stocks that you would not get that amount. Okay. The other thing is now if you go into covered calls, so let's just take a look at how much could we make from trading covered calls. Okay, so from covered calls, the way you would do this is how many shares can you buy first? This is one way to kind of do it. And the current stock price is 40. So we'll just take our $1 million, divide that by 40. That gives us about 25,000 shares. So we've got shares. Got about 25,000 that we can buy. Covered calls and trading covered calls is not a perfect way to do the calculation, but what I'm going to do is I'm going to break it apart from getting the premium over here. So we'll aim to get for the premium, and then also I'll do something with the stock appreciation over here. So that's kind of what I'm writing in this area. All right, so in order for us to get these calculations, we're going to take a look at what do we make on a monthly premium, and that's about a 30-day out. We can use about $25. That's a delta of 20. That's just meaning the stock will pop just a little bit, not a lot. So if we're trying to make about 20 cents or $20 on each one, you could say 25, but again, let's just be a little conservative. You won't make the full 25. Let's maybe say 20 cents. So that means on 25,000 shares, what we'll do is make about, well, first we got to calculate on that 25,000 shares. We're looking at how many contracts. Well, the way to do that is you divide by 100, which is just take off 2 zeros, and you get 250 contracts. Okay, so that means you're able to sell 250 contracts when it comes to options. Okay, now with that 250 contracts, you are able to get about 20 cents, which is $20. That means you make about an extra $5,000 on a monthly basis. Now, again, maybe sometimes you're losing some things. Maybe things aren't always perfect. Maybe you're not selling the full 250. I am just going to multiply this times, instead of 12 months, we're going to do it by 10 months. Okay, so that gives us an extra $50,000 when it comes to option premium, okay, for the year. So that eliminates a couple months, maybe vacation time, or whatever the case is. Okay, now the next thing that we want to do is look at this stock appreciation. So stocks, it's tough to dictate how much it'll appreciate, just like a real estate home. What you're really looking at is, if we look at the chart, from December or even 2024, that stock was at 37. Now it's at 39. So you could say it's a $2 move. Now, if you catch it maybe in October, and it's going up from October from the lows, that's 30 to 43. That's a 13-point move, but it's probably not going to do that. Looking at, here's another platform here. If we look at other years, you could say, okay, well, let me take 2023. Well, this position started at 40 and it was down to 31. So it was down $9. So you could see other times that stock actually did go down. Or in 2021, we were here and then we went down again a couple bucks. So it will vary year to year. I'm just going to say, let's assume this stock is appreciating like many stocks. We're just going to say it appreciates $2 for the year. Okay. So it's not going to be 9. It's not going to be 10. It's not going to be 5. Just say $1 to $2 a year. And the way you do that calculation is you take your $2 move for the year, okay, times 25,000 shares. So that's about $50,000 again. So, okay. So now what you've got is about $150,000 a year. If you add all three of these together, $150,000 a year of profit potential on $1 million portfolio with a dividend stock. Without a dividend stock, it's going to be roughly about $100,000, because you won't get this extra $50,000 on that dividend yield. So it just shows you dividend stocks can be pretty powerful. And remember, we calculated here $50,000. If you actually do get kind of 6.8%, well, that'll be about $68,000. And we, have changed some of these to be a little bit lower. I don't really know exactly, because it's always constant, dynamic, and it's changing year to year. Option premiums are changing. You're doing different things in different spots, different zones. But that just roughly gives you an idea. That's also assuming you sell an exact equal number of contracts. Those of you that are a little more advanced and professional, you know that you can actually sell 300, 400 contracts in margin accounts, portfolio margin accounts, and it's not going to really do, too many crazy things to that account, especially at that size. So anyways, I just want to show you this idea and concept just based on kind of dividend stocks positions based on this question, because they're powerful. They could add quite a bit of money into that income stream and do quite a bit. And it's exactly what I do and talk about when we work with coaching and one-on-one and mentoring with the people that are looking to do covered calls. We talk about dividend stocks and how that could really appreciate the growth behind the portfolio that people have. If you're interested, if you want to learn more, if you want to work together, if you're interested in coaching and mentoring, check out our website. The links are down below. We also do group classes as well. So it just varies what you're looking for. But anyways, appreciate it. Thanks for joining me, and hope you continue to learn and educate yourself. I'll see you in the next video. Take care.